Hi everyone and welcome to today's more important analysis videos on Thursday the 12th of October with me, Richard Perry, market analyst at Hantec Markets. We've got this continuation of the dollar weakness going on. We had the Fed minutes yesterday and the Fed came out and said that it was still going ahead with its tightening, but basically there was a running theme of concern about the lack of inflation and the persistent sort of low inflation that could take hold. So the market has taken this dovishly, and what you can see is the dollar has continued to fall as it has done throughout this week, really. And this has come as Treasury yields have started to drop away. But interestingly, the 10-year is the dropping, or the longer end dated yields are dropping, although the shorter dated are not really dropping, and that is causing the 2-10 spread to fall away, which reflects a flattening of the yield curve, which again is sort of dollar negative, I suppose, going out. So it's all sort of pulling on the dollar lower, and that is a key factor that we are seeing today, and it's a continuation really. You can see that across the forex majors. Euro's just sort of losing a little bit of impetus, but sterling still, and also the yen stronger, and pretty much across these majors we're seeing the dollar weakness, and that's also helping gold to continue to rally. Not far off 1300 now, and I'll talk you through the technical implications of that in my chart analysis video in a bit. But we're also seeing, interestingly, equity markets in the European trading session once again losing traction, not able to sort of push on, and there are some key moves potentially coming up for these markets if that continues. So what we have got is this continued dollar weakness and continued interesting European equity market consolidation. So what have we got to look forward to today? Well, inflation. As per the Fed minutes, inflation is key, and today we get the PPI, which is the factory gate inflation, and the expectation is for a very slight increase in the headline. If I can find it, where is it? Down here. Very slight increase in the headline to 2.5%, but the core PPI is expected to be flat at 2%. We've also got jobless claims at 130. Expected to just mildly improve to 251, and then we've got the weekly crude oil inventories from the EIA. Now this is on a Thursday because we had Columbus Day on Monday, and the crude oil inventories are expected to have a drawdown of 2.4 million barrels, 2.0 million barrels on the distillates, and also interestingly a decline, very slight decline on or drawdown on the gasoline stocks as well. But we've also got Mario Draghi speaking at 1:30. That could be one of the reasons why the euro is just sort of consolidating a little bit today, ahead of that speech. Now my chart today is the euro Kiwi. Now I sort of took this on this breakout, and it's a key breakout. The key breakout that came above sort of 166.90, but there was basically a sort of a resistance band, 166.50 to 156.90, that has been broken in the last couple of days, and that is a key breakout. Look how far back this goes, 2016, and it sort of continues this move higher with the uptrend intact and the momentum indicators strong. Seen a little bit of a pullback back to the breakout today, as the Kiwi has been strong whilst the euro is consolidated. But I think, as a general rule, I think the Kiwi is an underperforming forex major, and that sort of unwound it back to this little uptrend that we've had in the past few days, and also back towards the breakout 66.50. So this is, I'm seeing this as a buying opportunity. Now this could start to come under a bit of pressure if the RSI started to fall decisively below 30, for example. But the MACD lines are back to sort of levels at which you'd start to think about buying area. And as I said, the uptrend and also the breakout support, that 66.50 is a level that the market has looked at yesterday and held. So this is coming back to possibly a key buying opportunity area, and I think into this support this is likely to be a decent amount of buyers holding up. So yeah, I think this could be a little opportunity for the Euro Kiwi, because I think that breakout is a key near-term breakout that's likely to get bought into a correction. So with that in mind, I wish you good luck in your trading today, and I will speak to you later. Thank you.